Ivy and Peter French just closed on their first home and only cost them $45.
We put $500 toward for our earnest money, and we have to have $45 for closing.
The Frenches started looking for a home after getting a small inheritance, but were pleasantly surprised they didn't have to tap into it.
It's been really cool to have a lot of leftover funds for, purchasing stuff for the house. Like that was just crazy, and it's nice because we really feel comfortable with our monthly payment and everything, just because we have that cushion too. So we kind of have some time to figure out if this is what we need to do to make this work.
Ivy and Peter did the right thing. They contacted the bank, they did their research, they came into the bank, had a meeting to figure out what their options were, so that when they went out looking for the home, they knew exactly, pretty close to what they would need out of pocket by the time they were done.
The reasons the Frenches were able to get into a home so cheaply is because they qualified for South Dakota Housing's first-time homebuyer assistance, but they also got a $1,000 grant from their bank. Mortgage banker Brian Spahn says there are plenty of ways for people to come up with the down payment.
That doesn't necessarily have to be money that you have today. We have a lot of people that get gifts from family members. That's allowed. We have people that take out loans out of their 401ks. That's allowed. We have people that have a vehicle that's paid for. Maybe they want to take out a loan on that vehicle, use that for the down payment. That's also allowed.
Conventional loans require 5% down, while FHA financing's minimum is 3.5% down. People who qualify for rural development or VA financing or first-time buyers can get 0% down. But people who put less than 20% will pay for private mortgage insurance.
That's true, yes, that's correct. But if you think of how long it might take the average person to save $20,000 to $40,000, that could be several years of going without owning a home.